Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at one factor which is absolutely critical in navigating through any money market, and that also applies to cryptos. I'm also going to try and clear up any confusion that people may have had in the last couple of videos that I've done regarding the end of the bull market and the timelines that I've given you. And as per usual, I'll have a look at the wider markets as well as look at the 60-day cycle to make sense of the near term and the medium term for Bitcoin and the Bitcoin price. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I'm going to quickly cover this factor, which is incredibly important in navigating ourselves through money markets. We all know that having a very positive and a good attitude generally will help everybody in their career, in their finances, their personal growth, health, and all the other areas of life that we come across. And that is no different to being in the crypto space or the general wider stock markets. And the reason why I say that, I read a lot of comments in many people's videos, and I notice some comments, and they're more common than anyone would envisage, simply because what's happened, and I think we've all been there, is that we make decisions, but the market doesn't give you what you want. So you buy into the market and the market goes down, or you sell in the market and the market continues to go up. For some reason, people get angry with the market that it hasn't done what they want it to do. But what you have to do is not to take that frustration, that irritation, maybe anger into your next decision, because if you do, the chances are excellent that you will make the wrong decisions one more time. And part of this wrong attitude towards the market is when you have a narrative that you want the market to play. If you set your target for the Bitcoin price to top out at the end of 2024, and then you get out of the market at the end of 2024, but the market then continues to rise, you're going to be looking to blame somebody else for that decision that you've made. And similarly, if you're waiting for the market to top out in 2025 and it tops out in 2024, you're going to have a similar scenario. And this is one of the main reasons why I repeat over and over again that you must keep an open, fluid, flexible, and a neutral stance towards the market. Let the market dictate your decisions, because the market isn't going to play to the narrative that you have. People must keep that narrative fluid and flexible. And one of the reasons why I'm mentioning this factor called attitude towards the market is that recently I've done 2 videos on different outcomes for the current bull market. So this was the recent video I did a few days ago. Then about 2 weeks ago, I did this video here. And I was painting different scenarios based on what the Bitcoin price was doing at the time. And it is understandable that some people may have watched one video but not the other, etc. So let me make it clear regarding this bull market and the different scenarios. So without going through all the cycles again, the main thing to remember is that in this first cycle here, and the second cycle, and then the third cycle, all 3 were very much interrelated in terms of rhyming with each other. So what happened in this cycle, very similar, but not exactly the same things happened in the second cycle. And the third cycle rhymed with the first 2, but not exactly. And these cycles had what we call a right translated cycle, where we had 3 years up, 1 year down. 3 years up, 1 year down, 3 years up, and 1 year down. So based on the right translated cycle that we'd had in the first 3 cycles of the Bitcoin history, and by measuring the bottom of the bear market with the end of that cycle here, and working out that the halving was in the midpoint, and this happened for the previous 3 cycles. So based on that historical information, we came to the conclusion that there is a high probability that we're going to be topping out around September 2025. As I showed you in the videos, the previous all-time high was not hit until after the halving. And that was the signal which gave the right translation for the cycle. So similar things happened here in the second cycle. After the halving, we broke the previous all-time high. And in the third cycle, exactly the same. After the halving, we broke the all-time high. And this time around, I've been mentioning from quite a long way down here that if we came to the all-time high before or just around the halving, the probability is that we're going to make a left translated cycle and top out in 2024 rather than 2025. So when I made the video regarding the 2025, That was 2 weeks ago when the price for Bitcoin was 51,000. So at that time, we hadn't broken or come to the all-time high as we have now. And as I've just repeated, looking at the wheel of life and why attitude is a very important ingredient in being successful in this market, we have to be neutral, fluid and flexible when dealing with this market. So now that the price has come to the all-time high, and we've now even broken out above the 69, very clearly above the 70,000, from a probability point of view, this is now invalidated. And always remember, in the money markets, there are no guarantees or certainties that anything is going to happen. We are in the realms of probabilities and possibilities. So judging by what this sign says here, i.e. breaking above the 70,000, it seems unlikely now, based on what's happened in the past, judging by the price action, and we have to be dictated by the price action, and that would dictate to us that we are in blow-off mode. That means that we have between 6 and 12 months before the end of this bull market, not until September 2025 anymore. Because in the last video, I did show you that once you get above the 69,000, i.e. previous all-time high, just like it's done in the past, whenever you break the previous all-time high, you have a certain number of months before the top, and that can be just a few months. So if we look at the first cycle here, when we broke the all-time high, we had 9 months to the top there. We broke the all-time high here, and we had 11 months at this point. And in the last cycle, back in 2021, some people would regard the April 64,000 for Bitcoin as the top, which technically is true, and the eventual one was at 69, whichever one you want to use. So the April one was 5 months and the 69 one was 11 months. So you can use either. The point is not to get bogged down with the number of months, but the time period is important. This blow off top could even be 3 or 4 months, but judging by the past, it can be 5 months as here, or 11 months. But the most important thing is that we're getting a very strong signal from the market that we're going to top out between where we are and the end of 2024. September 2025 is now a low probability. And the most important thing is not to actually get bogged down of exactly when the market will end, because that's where the exit indicators come in. Those are the most important things. When the exit indicators are telling you that the market is topping out, that is the time to be thinking about exiting the market. And for those of you who've been watching my videos will know that these are the exit indicators that I'm familiar with, and you may well be familiar with other exit indicators, and I'm very happy for you to share them in the comments below of the ones that you know which are not on this list here. Then the main one that I would be using here is this pi cycle, but there are the other ones like the top cap, the Puel multiple, the Maya multiple, the RSI and the MVRV Z score. And I'll go through these nearer the time. We're nowhere near at the moment to the top of the bull market. So please keep a good attitude towards the market. The main thing is to let the Bitcoin exit indicators decide when the market is topping out. But we do have the added complication this time around of the ETFs, which we've never had before, and that may well affect the exit indicators this time around. But those exit indicators are all that we have. So it's always better to use the tools you've got. Otherwise, you will be left with just speculating based on trial and error. And that normally doesn't end well. So if I give you an example here on the weekly chart, we know that the previous peaks, like this one here, was at the exact point where the green line crossed the red line on the pi cycle. The second peak was also exactly when the green line crossed the red line here. And the third peak here was exactly the same. And in the last cycle, in April 2020, we had exactly the same top at 64,000 when the green line crossed the red line. So just based on that previous indicator, which has been 100% accurate in predicting the previous peaks, currently where we are, this is where the red line and the green lines are. So they're quite well separated at the moment. But obviously as the price moves higher, the green line, which is 111 simple moving average, and the red line, the 350 slower moving average, the green line is going to obviously catch up with the red line much faster. So as the price of Bitcoin goes higher and higher, we're going to get across somewhere anywhere between where we are and up to around the end of 2024, if the price action keeps going at the rate at which it is already. So the question is, while we expect Bitcoin to top out like we have in the previous peaks, and the majority of the reason why the price of Bitcoin has been going up so strongly is because of the ETF buying. And the critical point will be when the green line crosses the red line. At this point, we need to be looking at what the ETFs are doing. Because if you see a slowdown in the ETF buying somewhere along the line here, then it may well be that we top out at the cross of the pi cycle. But if the buying is continuing at the same rapid rate that it has been over the last few months, then people have a decision to make whether to get off the train here or to continue being invested with a view that the market is going to go much further. But certainly at this point is going to be a very critical decision that everybody has to make. And you really can't make that decision over here while we are so far away at this point, because there's a lot of demand and supply to play out between where we are to the point where the green line will cross the red line in the next few months. So we'll keep observing exactly what's happening with the ETFs and everything else in the wider markets to make sense of when these two lines cross and what the other exit indicators are doing at the time. And if we have a look at the wider markets, we'll start off with gold. As mentioned in the last few videos, so we've been expecting gold to have a big breakout above its neckline, and we duly got that over the last few days over here. And this is where the charts really do play out very, very well. And we always have to thank the signals that the charts leave for us. And if you have a healthy view towards the charts, it can really make you quite a lot of money by giving you clues of what is about to happen. So we had this trend line here with this amount of support all along. And when we broke out below here, the expectation was to come back up, retest this support line as resistance before the market would be expected to fall. But as we mentioned at the time, instead of falling, if it recaptures the support line, which it did with this candle, that was our signal that it was going to retest that neckline. And with a higher probability this time around, it was going to break out. And this is what happened exactly here. And that was all to do with the chart giving us a signal at this point with this candle. So when we zoom out, we can see quite clearly that gold is having a big breakout on this neckline. And this neckline goes back all the way back to 2011, where we had the bear market down here. We've created this cup and handle, this yellow line. We've retested it the second time there, the third time there, and this was the fourth time. And always remember, as a point of education, that whenever you see a big strong neckline like this and it comes up to the fourth or the fifth go, that is where the highest probability is for the price action to break through the neckline. And this is what it's duly delivered here. So we can see quite clearly with gold that it is very bullish, and we can expect over the next few months anyway for the gold price to be moving much higher. And if we move on to the SPX, we created the right translated cycle here, but we've been getting some bearish signals, especially from this gravestone doji candle, which we mentioned last week, and the price duly came back down and it's made another attempt, creating a double top at the moment by the looks of it. And with this bearish engulfing red candle at the top of a trend would suggest to us that the market is telling us that we may well have topped out in the SPX here. So we may well get a prolonged move into the 60-day cycle low here. So this could easily play out like this and come and retest some of the other necklines down here at around about 4,800. Moving on to the Russell 2000, we've clearly broken out above this neckline now for the second time. This was a fake out, but this one looks like a reasonable breakout to the upside. And we're having an indecision candle, which is sometimes you get on the breakout. And on balance, it looks to me as though this wants to go much higher. Moving on to the dollar, it's doing exactly what these two gravestone doji candles, shooting stars if you want to call them that, whatever you want to call them. These two are bearish candles with long wicks at the top. And these two were giving us the signal that the dollar is about to go down. And these are the two levels which I'm going to be looking at for the support, around about these levels at 199. Okay, moving on to the Bitcoin in the larger time frame, i.e. the weekly chart here, we can see quite clearly we're breaking the 69,000 all-time high and have had our first close above this yesterday. And with the current candle, it looks like we want to kick on much further. And this would suggest that we are in the blow-off top mood for Bitcoin, because I'm going to show you the previous cycles that whenever we've broken out from the previous all-time high, we very quickly move on in large chunks to the upside. And one of the indicators that shows us quite clearly that we're in this kind of mood are the Bollinger Bands. And especially on the weekly chart, when the price action starts to operate outside of the top of the Bollinger Band, this does not occur very frequently and usually comes in the parabolic phase of markets. And as you can see in the previous market here, it started to do that once we passed the previous all-time here at 20,000, the price started to operate outside the Bollinger Bands. And after a brief pause, it continued up to the $64,000 mark here. So what can we expect going forward based on what's happened in the previous cycles? If we go back to 2020, when we broke the previous all-time high of 20,000, we can see that within a period of 4 weeks, these 4 weekly candles, we went from 19,000 all the way up to 41,000. So within 4 weeks, we had risen by 118%, with more than doubled within 4 weeks. In the second cycle, when we broke the previous all-time high of 1177, after a fake out over here, which we don't expect in the current cycle because of the ETF buying. So if we take the measure from here, we had a big run up over an 8-week period, which culminated in a 150% rise within 2 months. And the first 4 weeks of that was 58%. And if we go back to the first cycle, where we broke above the previous all-time high over here, within 5 weeks from breaking up, it went up over 400%. And I would suggest that is an anomaly because the Bitcoin asset was new at the time, and new assets usually have much bigger volatilities. But we can see quite clearly though, the main thing is to see that once we break above the previous all-time high, we tend to run up very, very quickly. And the lowest of those increases after breaking the previous all-time high over a 4-week period was about 58%. And if that was to happen here, that would take the price to over the 100,000 mark. So we just have to keep in mind, that's not a certainty, that's not a guarantee, but based on the previous cycles, we can see that there is going to be, with a high degree of probability, we're going to make some rapid moves in this region in the next few weeks. And anybody wishing to short this market, all I would say is good luck with that. I wouldn't want to be standing in front of a bullet train when it's coming at you. Okay, moving on to the 60-day cycle, there's a lot of information to be gleaned from looking at this 60-day cycle for Bitcoin. And many people ask why I use the 60-day cycle as part of my analysis. And the gentleman who created the cycles trading was Walter Bressart. And he gives you an insight into why the cycles trading is incredibly important. And as he rightly says, there is no magic oscillator or indicator that will bring you success in the markets. And tools to improve the timing and determine trend is the key to low risk, high probability trades that can bring you success. As he says here, there are many tools to help improve your trading, but only cycles will allow you to add the element of time into your trading. So what the cycles do is they give you an element of time to build into your trading and investing. And if you look at the 60-day cycle for Bitcoin, here at Wisdom Bites in the private member section, we use these cycles. We successfully use the Bitcoin mining cycles to execute the swing trades with the Bitcoin miners. So what we have currently is that we bottomed out on day 43 previously. The midpoint was here. And at this point, what the cycles trading was telling us is that we're going to be moving either into consolidation or a fall into the midpoint of the cycle, which is exactly what happened here. And this has happened time and time again previously. And the second half of the cycle, that we know that in a bull market, generally speaking, with a higher probability, will create a right translated cycle, i.e. a higher point than before the midpoint in the second half. And this is exactly what's happened here. Now, in the last video, I mentioned that this big red bearish candle was giving us a signal that the market wants to go sideways or down from here into the end of the 60-day cycle. But I also mentioned that price action goes above it. That tells you that there is so much buying momentum in the market. And while we would have expected some sort of a consolidation or even a little bit of a correction, the market just wants to leave everybody behind here. So this is a signal that the market wants to leave those who are on the sidelines waiting for these little corrections here. It's just not going to give you that. And this is our first sign that this is moving much higher. And as I've just shown you with the previous cycles, that confirms the characteristic of the cycle once we get above the 69,000, which is exactly what we've done. So according to the understanding of cycles, once we do this and go above this point, the probability to go much, much higher is increased now. So this is what I would be expecting now for the price of the Bitcoin to go. We should make very rapid progress from where we are at around about 71,000 to 80,000. 80,000 is a round number. and most markets do work at round numbers, so you would expect some sort of a consolidation around the 80,000 mark. Finally, on the Bitcoin, a lot of people ask where this price could go. We can do two measurements, one with the linear scale and one with the log scale with the Fibonacci retracement. So if we take it from the 69,000 top to the 15,400, and this is with the log scale ticked here, the next level would be the 1.272, which is around 104,000. And as I mentioned earlier, with the rapid move for the price, it's not inconceivable that we can get to 104, 105,000 very quickly in rapid time within the next few weeks. And if we use the linear scale by unticking this, and as I mentioned in last week's video, $83,000 seems to be a reasonable price for Bitcoin to get to. So these are the two next levels really we've got, 83,000 and the 103,000. So 80,000 and 100,000 is a nice ballpark figure for the two targets for Bitcoin over the next few weeks. And if you're wondering what's happening with the ETFs and why the price of Bitcoin is going up, you need to look at no further than this chart. We can see quite clearly that BlackRock has now surpassed the number of Bitcoins it actually holds within 2 months compared to MicroStrategy, which started to actually accumulate in 2020 over the last 4-year period. But if you add up all the other ETFs and the accumulations there, you can see the amount of sustained demand that is still coming through. And you can see the relentless pressure of buying in the ETFs, in the inflows that we've got here. That while GBTC, the grayscale exchange, has lost 28,000 over the last 7 days, BlackRock has more than made up all that all on its own. And the other ones like Fidelity, etc., are all in the green, doing exactly the same as well. So if you're wondering why the Bitcoin price is going up so much, the sustained and relentless pressure from the ETFs is causing the fuel for that fire. Unfortunately, a lot of people, for whatever reason, feel as though they've missed out on this big move to the upside in this bull market. Unfortunately, when the markets are down here, most people are very bearish because they expect the price to go lower. And when we start rising over here, most people still think it's going to go much higher, but the market does the opposite at both ends of the spectrum. So if you think you've missed out on the big move with Bitcoin here, there is an opportunity that we here at Wisdom Bites look at, and that is the Bitcoin miners. They are a leverage play on the Bitcoin price, and currently they're being left behind because of the big surge in the Bitcoin price here. And this is quite characteristic with the Bitcoin miners in the previous cycles. So for instance, if we take the price from the approval of the ETFs on the 11th of January, from the bottom of that candle to the current price, we can see Bitcoin has actually increased by about 57%. And if we have a look at one of the main Bitcoin miners, Marathon Digital Holdings, from the bottom of the 11th of January candle here to Friday's close here has gone up by only 12%. And the Bitcoin miners are supposed to be a leverage play. And this is quite characteristic of the rest of the miners. So we know that in the short term, they're being left behind. And in the private member section where we cover the Bitcoin miners, we have our passive portfolio for 2024. And in the last year, in 2023, that portfolio went up by around 300%. So we started off with just around the $100,000 mark. And that went up by the end of 2023 to $434,000. Our target was 1 million. So we were about halfway there. Our current target is 5 million, and being the parabolic phase of the market, we would expect to be nearer the 5 million than we were nearer the 1 million here. And what we cover in the private member section is, apart from the Bitcoin analysis, we cover the 60-day cycles with a view to do swing trades, but under the current circumstances with a parabolic move, swing trades would be disastrous, so we're not going to be doing them in the short term at least. What we are doing is to track the long-term portfolio, which is a passive portfolio, as well as a trading portfolio where we can see some opportunities for ratio trades, as we call them, by moving between miners without taking the risk. We do 2 videos every week, Wednesdays and Fridays, as well as leave updates on a daily basis of what's going on in the markets. If you want to join us, all you have to do is click the join button here or the one in the description box over here, and for the price of a coffee per week, you can have access to all of the previous videos as well as all the market updates and all things connected with the Bitcoin miners. It's a great opportunity to play the leverage trade with the Bitcoin miners. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so, and to click the notification bell. If you've got any comments, questions or suggestions, please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.